In today's video, we are going to be checking out some divergences on the Hex chart. We're going to be looking at what happens when the Federal Reserve's pivots on their interest rates. We're going to cover the daily stats. We're going to cover some of the money raising going on in the Hex community, the volatility index, and when markets bottom. So let's jump right into this chart. These charts, I should say. So the divergences that we're talking about is, I'll quickly pull it up for you guys. So we have different types of divergences. Firstly, you have your bullish divergences on the side here. This is simply when the price is going down, yet the oscillator at the bottom here, I don't know if you guys can see my cursor, but the oscillator or your indicators are going to the upside. And on the bearish side, you normally pull it from the top. You see the price is going higher, yet the indicators are going lower. Then you've got medium one, which is normally just straight lines on the chart, or double tops or double bottoms, with the indicator going the opposite side. Then weak divergences, and one of the stronger, more relevant ones is hidden divergences, when we have price going higher, yet the oscillators are going down, right? So let's cover a few of these. So on the Hex chart, I like to look on the line chart because it filters out some of the noise, and at the end of the day, these oscillators only print when the daily or the time frame that it's relevant to has closed. So as you can see here, Hex has been in a downtrend for months, right, since June of 2020. And we can see, I don't know if you guys can see it, but you can see there's a -2 angle. So it means the price is going down, right? Let's just pull it down to here. So that's -3 degrees to the downside. And when we look at the RSI from the 13th of June as well, and we can just use the angle again, we can see that there is a +3 degrees divergences to the upside, right? Let me just pull that image up again for you. So price is going down, yet the oscillator is going higher. So this is strong bullish divergence, right? This does not mean the market has to reverse right now. Obviously, we've been in this divergence for quite a while, but until we close, if this RSI is to close below 35.07, we can see the length up here, that would be invalidated. So we are currently sitting at 37, and if we close above 35, it's invalidated. But this is quite a violent divergence to the upside, so it seems like it will be holding for a while. This is the stochastic RSI. We can always also see clear divergences from the 13th of June to where we are currently at. The indicators are coming down. It's in the oversold area, but still a 3 degree positive divergence over here. So this is bullish as well. Down here, we can just move use the moving averages on the MACD, and we can just see the moving averages going up high very quickly, right? We could do it from the 27th all the way up, right? So strong divergences there. Although this is from this low down here, which was at the body close at 3.4 cents, so we're currently at 2.5 cents. So yeah, momentum on the indicators are slowing down, and not only that, OBV, which is called on balance volume, this is probably the stronger divergences, because this shows the volume that is traded, just positive and negative subtracted from each other. And when you can see from here, 13th of June again, all the way to where we're currently at, that's almost a 9 degree divergence, a positive divergence here. So this is very, very powerful, and it's just a matter of time before we have an explosion to the other side, right? So divergence on divergences, bullish divergences practically on all of the indicators We just have to sit through this last selling that is happening, but it still hasn't overwhelmed the sellers back in 13th of June. There's been much more sellers back here, right? So it's just a matter of time before we get a reversal over here. If you like these videos, please click the like button, subscribe for future videos as well. I'm not a financial advisor, right? I simply just read the charts off as I see them, right? Next, let's look at the volatility index. We've looked at the VIX previously. We've discussed it a little bit, but this is the volatility index of the S&P. This just simply shows when it spikes high like this. This is when volatility is at its highest. This just means when most of the trading happens, right? And when we see these spikes, you have the Dow Jones Industrial down here. We have Bitcoin's price here, and then the Nasdaq also. We can just pull up the S&P as well. We'll just leave it at a line chart, but every time you see these massive spikes, you see a bottom in the market. You see the Dow Jones Industrial. This was the virus dump when Trump closed the borders, right? We can see the Dow Jones bottomed, or Bitcoin bottomed, made a significant low, although we didn't break the previous low that we made in December of 2018. We can see the Nasdaq dumped, and then the S&P as well. Let's just put that on a bars. If you guys are interested, we can in fact measure what the moves have been. So that was a 38% dip. The Bitcoin dip was okay, this is quite hard to pull it up like that. A 60% dip on Bitcoin. On the Nasdaq, this was a 30% dip. And then on the S&P, it's got the bars. We want the candles. Also a massive dip, a 35% dip. So then we have another spike, although this was the Bitcoin bottom that I marked there for us. It spiked up all the way to 36, but not above the 45. There are people on the internet saying when the market tends to bottom when it pushes above 45. So we had a little bit of a spike there. This was the actual Bitcoin bottom. Let's just see. 10th of December was the Bitcoin bottom. This happened a week after it. So yeah, it's not proven. Just simply what I'm trying to make a point of, it's not that accurate versus Bitcoin, right? We have it spiking up here to 47, which, when was this? 2018. Then we had a little dip in the Dow Jones. This was like a 12% dip. A dip in the Nasdaq, also just 10%, and then also the S&P 13%. Nothing major really. Then we got this large spike in 2015, 15% over there. Bitcoin actually did make a low here on this VIX. It dipped like 45%, 46%. But this was the 2015 bottom in Bitcoin. Then the Nasdaq dumped 19% and the S&P dumped 13%. Then this was September 11th. Okay, so we all know what happened then. And this was October. This was close to the first Bitcoin bottom ever. interesting. Okay, so then we get to the start of Bitcoin's inception, which really doesn't have, well, obviously it didn't trade before then, right? Then we get a massive spike in 2008. This is the great financial crisis, right? The volatility peaked actually before the bottom was in. The bottom only happened the year after that. This trailed it a little bit. So what we want to see is the volatility spike a little bit, although this has not happened this season yet. So it seems like we still have that crash that needs to happen in the overall market. But as we've seen, it does not really affect Bitcoin that much, except for the COVID dump, obviously, was quite significant for Bitcoin. So it seems like there is one last washout to happen. If we just go on the daily quickly, we can move the others. We do have the VIX currently spiking up, making a massive gap since the start of today, actually, which is it seems like we are on the way to the upside now. So in the next month or so, we might see this play out, right? Next, we'll look at the federal funds rate. This shows all of the rate hikes, right? So we are sitting at 3% currently. This last time, well, what I'm trying to show here is every time the Federal Reserve pivots, what everybody is waiting for is this magical pivot moment, right? And every time this happens, as soon as the Federal Reserve starts to ease on the market, the rest of the market dumps, right? We can see this was when COVID, this is actually before COVID, right? COVID happened here, and then the Federal Reserve turned the interest rate all the way down to 0. So as we can see here, when they start pivoting, we can actually see that Bitcoin started dumping, right? Not only that, over here, this is the Dow Jones, you get a dump after the pivot. And down here, the Nasdaq, they start pivoting, it goes up a little bit and then you dump. And also the S&P, the pivot starts, it goes up a little bit and then we dump all the way into COVID. The last time they pivot was before that, was over here in July of 07. This was before Bitcoin, right? They start pivoting in July, and consequently we see the Dow Jones dump, we see the Nasdaq dump, we see the S&P dump. So all the mainstream economists are waiting for this pivot to happen, thinking that that is the bottom of the bear market. But in fact, this just starts a massive downtrend. You see again in 2000, the Fed starts pivoting. The rates were sitting at 6.5, excuse me. They pivot all the way down to 1%, and the market dumps into it. This is the Nasdaq. Nasdaq pretty much made its peak when the Fed started pivoting, and down we go. So everybody waiting for the Federal Reserve to stop raising interest rates and start reducing them, that actually causes a massive downtrend, right? Because most economists are wrong, right? Especially if they're mainstream. So it's kind of worrying, and it makes it a little bit more unpredictable, because it seems like the Fed is going to stop or slow down on their pivoting by next month already. The market is already pricing in a 50% basis point rate hike. So what we might see is actually maybe they keep it here for a few months, right? For a year or so. This will actually give crypto maybe a chance to rally out of it. But when they eventually start reducing the interest rates again down to the the expansion phase on their balance sheets, we're going to see a crash in crypto and the rest of the bull market. So what we might see in the next year is actually quite a nice rally, and then a low, or when they start pivoting, a retest of these lows in the future, right? So we might get this nice double bottom in 2023, or maybe even 2024, because the cycle top is timed to be in 2025, right? So there's not even another space here for me to draw it on. Yeah, so what I'm saying is don't fall for that Fed pivot trick. There's lots of like Motley Investor and Dixon Piper as well. They're all waiting for the Fed to pivot to get back into the market. But what they're going to experience is they're going to experience this massive dip that happens after the Fed starts to pivot and starts relaxing on the monetary fund or monetary areas, right? So yeah, just something to look out. Shout out to Alessio Restani, or whatever that Italian dude's name is. He brought this to my attention, but then I actually pulled up the charts and I saw that it is in fact so, right? Yeah, so the only history we have for Bitcoin to go off of is when they started pivoting back here. And then we had the massive downtrend into the COVID dump, right? So the pivot is not a bullish thing. It's in fact quite bearish. What I think the underlying situation there is that the professionals, if they've missed the boat, they bring it back, right? And when the rates are so low, they can borrow cash for super cheap. So they'll go, and they want the market to be bottoming when the rates are very low, so they can get those loans for incredibly cheap, get a fixed rate probably, and then just start speculating in risk assets and make a killing without paying very, very high interest rates, right? So yeah, that's just my thinking. They always bring the boat back, right? So in fact, what we want to see is the Fed slow down on their rate hikes and keep it there for quite a while. And when they eventually pivot, we might get that double bottom in the market or in crypto and head up from there, right? So let's quickly look at, I think we can cover shorter range, see if we maybe have divergences on the shorter time frames. This is the daily chart, of course, for Hex. We can see that the RSI is at 31. So we have bullish divergences here on the daily. RSI is going higher by 1 degree, yet the price is going down significantly. The stochastic RSI as well going higher by 18 degrees. Price is going down aggressively. Okay? Let me pull that up again for you guys. The one right at the top left, price is going down. Excuse me, top left, yes. The price is going down, yet the oscillator is going up, right? So this is bullish divergence. It says that a trend reversal is coming pretty soon, right? The stochastic RSI, although not on the time frames, we do have divergences here, right? You can see the indicator, the MACD is going up, yet the price is going down from back here already. So this is quite massive, quite significant, minus 8 degrees here. We just remove all the drawings. And then the on-balance volume, I don't think they're, okay, in fact from back here in November, there is divergence going on. 1 degree bullish divergence down here. Price continues to go down, right? So it seems like a trend reversal is quite coming up quite soon. While everybody might disagree with me here, this is what you want to be looking for. And we also have divergences on the shorter time frame down here. But the RSI can technically come down a little bit more. That would be a very good buy signal, because when the daily tends to get as oversold as it was back here, you then get your nice expansion wave to the upside for a nice trade. I'm not telling you to trade. If you don't know what you're doing, you will get wrecked, right? So we've looked at the volatility. We want this volatility to spike to indicate an overall market bottom, and that would be bullish for Bitcoin, right? Because it's quite correlated with the rest of the market by now. The federal fund rate, we've looked at when they start pivoting, price dumps, right? So we want a long easing phase actually before they start loosening on the Fed rates, right? Hex daily stats, we're still adding holders and massive add on stakers yesterday, 140 new stakers. Do use the Staker app down below if you do not have a wallet. The Gnosis safes are really growing on me. It is pretty cool and very secure, especially if you figured it out, but it is a little bit more advanced, but either way. So the guys at Kinetics and the Discord Syndicate guys are raising funds to get a, here we go, Hex crowdfunding for a declarative statement from the SEC regarding Hex is not a security. And Steph, the creator of Staker app, is taking them on a little bit more. I also retweeted this, but I'm starting to second guess my opinion on this. Let's see how much they've raised, like 4.5 already, almost like $5,000. But as Steph says, imagine giving financial advice, claiming to be a millionaire or retired, then begging for money on Twitter. Yeah, so he's taking on these guys quite aggressively. Asking for 1 million from folks when you're so deep in the bear market to fund unproven legal experiment is just like calling a sack for a BSC fork to finally understand 1 year later that it's better to go with copy pasting ETH 2.0. So I kind of agree with him. I mean, the Mexicans are so up to their necks in sacrifices. We've absolutely wrecked the Hex price with sacrifices, and there's more every day coming up. I mean, that internet money one is also from KG, is also ongoing. People are getting distracted by proof of bot things, many different things, and I just think that firstly, we don't know if it's going to work, so we might as well just not do it. Like, why? For 3 years we had amazing performance without the SEC saying anything as well. So, and I don't want them to. Yeah, it's so weird that we're cozying up with regulators all of a sudden, right? This is supposed to be crypto, supposed to be getting rid of middlemen and getting away from the conventional financial system, which has pretty much just bankrupted everyone, especially the Americans, right? So I think there's better things to, and better timing to do this. I mean, let's just wait at least a year for confirmation of the subpoenas and see how that plays out, and then look to start fighting, right? So either way, I'm a bit split, but I don't think people should be wasting money right now, especially not selling the Hex price to fund these things. And they want $1 million, and they're supposed to be incredibly rich. I mean, RG3 is always bragging about how much money he has. He literally said in a Twitter space today he's sorted for generations. Literally, that was his direct words. So, and we don't know if they're going to be using that funds for the Hex Investment Trust, right? Because the Hex Investment Trust also got a subpoena. So yeah, and they've been working with a lot of lawyers. Let me know if you guys want to look at altcoins. Hedron taking quite a little bit of punishment, Icosa as well. I think I've covered everything for today, so let's get into the chat. We've broken lows here. This is not good. Lows on Hedron, right? Let's see what you guys are saying. Nicolas Maras was here before it even started. How are you? You're the man, Nicola. Hans the man. Shadow Hex. Hi Hans, you're one of my favorite new Hex/market content creators. Keep up the good works. It's a pleasure, dude. Basil X, hi Hans, good to finally catch you live. Good to see you here, Basil X. I don't know, I think I've seen you in my comment section, but not in the live chat yet. So yeah, let's cover some of the Hedron or the overall market or the Hex ecosystem. You guys know my opinion is rather stake Hex and get these airdrops for free. We are in the reload zone. We have failed to hold higher lows down here, so we need to come lower, at least to the 78.6 level. Let's go down to the daily. We've been pretty oversold here, but the MFI wasn't, so we're going to try again. We want these RSIs and the stochastic and the MFI to get below their dotted lines, right? That's an amazing buy signal, and it looks like it wants to happen because we've unfortunately lost these lows down here. Let's look at ICOSA. So I think ICOSA also made a new low, and now that the auctions are over and people aren't talking about it anymore, we have the downside that we were expecting, right? We can maybe do an extension to see where this might be going. Ooh, this is showing 15 cents. But there are maybe retest 50 cents. If 50 cents doesn't hold, you have more room to go down. Let's see what the indicators, we can just look at the RSI. I mean, we're so low already. Is this bullish divergence? 28. No, so this is a new low in the RSI as well. We need to see a nice little W here with the low being defended. And maybe the price continuing down, and then you get your bullish divergence, right, and the reversal. But so far there's just more room to go down. Looks like 50 cents is your next target on ICOSA, unfortunately. But either way, just take it and forget about it. Let's look at what ICOSA versus Hex is telling you. So both of them are going down simultaneously. Let's just remove all of these other things. So, made new lows. You're getting 23 Hex per ICOSA, right? And it looks like, let's put on the shorter time frames. We'll just remove the background because it's ugly. Next target seems to be at 21, and if 21 does not hold, you're going all the way to 18 Hex per ICOSA. Let's see what the RSI is telling you. Pretty oversold. No divergences yet. So it's pretty much the same as the ICOSA chart. You want to see higher lows and maybe the price continuing down, and then you've got your bullish divergence for a reversal. It doesn't have to put in bullish divergence, just need to get oversold, right? How long can this bear market last? That is a really good question, and like these bear markets, right? Let me just pull up our Bitcoin time analysis. I've got two different time analysis on here. Why? Okay, let's see. So we're pretty much in the area where crypto tends to bottom, right? It bottoms between the 61.8 and the 78.6 level. This is the 61.8, the golden ratio, and the 78.6 level. We can just go to previous bull markets. You can see here, now this is using the halvening as a time analysis, right? And you can see this is where we are currently at. We are right inside of this box, right? Let me just pull it up for you so you can see it. And we've already spent a little bit of time in here. In the past, Bitcoin has already bottomed by this at this time, right? So the bear market, it depends if you include this whole sideways movement, right? The accumulation phase. Because you start moving sideways and you keep on moving sideways until the breakout happens for a few years, right? So from the bottom to where you finally break out is 673 days, right? And up to the bear market, it starts getting really bullish right up to the halvening, which is from the bottom all the way to the halvening is 500 days. So from where we're currently at to where the halvening happens is 460 days. So the accumulation phase tends to last quite a long time, right? All the way past, let's just measure this up, 670 days. So if this was the bottom, I mean the accumulation phase will last like right into 2024. Oh shit. Sorry about that. Oh no. I covered the whole chart. I should have said something earlier. So should I go over that again? Right, so the sideways movements, what is called the accumulation phase, tends to last almost 2 years, right? So you've got a year and more to accumulate before the bull market starts. But the low prices, and pretty much what I'm trying to say is it's hard for me to think that this time it's different, because that is pretty much the opposite of the way I think. Like, these things are so cyclical, and the 4-year cycle has played out literally every time. Let's pull up the 4-year cycle quickly. So yeah, the 4-year cycle has played out every single time, right? And I do not think it's going to change again. When I say the 4-year cycle, it's from the top to the next top. Tends to be 48 months. So this one was 49 months. From this high to the next high was 46 months. So 2 years shorter. Let's see how long this one was. The first cycle was very short, 29 bars. But the market wasn't matured at all, so I generally don't take that into consideration. From the bottom to the bottom was 52 bars, 53 bars, excuse me, 52 bars. So that was your 4-year cycle as well. So I don't think it's going to change. We are well within the 4-year cycle. On the timing, once again, on this 4-year cycle, because what you do here is, let me just remove everything. You use the Fibonacci time zone analysis from the high to the high, and this shows you on the 1.23 where the next, oh, that wasn't the top, this was the top back here. Shows you where the next bottom is. As you can see, the 0.23 is 2 months before the bottom, and we can do the same here. The 0.23 once again 2 months before the bottom. So we've already been 1, 2. Okay, so this is the second month closing now, where we generally on the time analysis bottom for crypto. And we can do that same analysis with Ethereum. From the top to the next top, you can see at the 0.23, which was the bottom, that was 11,105. So literally a month after the 0.23 you bottom on Ethereum. And look where we are currently at. We're pretty much a month after the 0.23. Or what we can do is we can measure out 48 bars. Is this the monthly? Yes. 48 bars to where we expect the next top for Ethereum is going to be in, and we pull it from the top to the top, and once again this shows you where Ethereum tends to bottom, 0.23. So I don't know why this would last longer this time. Everybody will tell you because this time it's different, we've got war and whatever. If we look at the Dow Jones Industrial, look how good war is for the market, right? 1945, so this was the 1929 Black Monday, October or September the 29th, you got this massive, this 1929, right, 100 years ago, you had an 89% dip on the stock market. This simply happened because of money printing. The Federal Reserve was created in 1913, and they instantly started expanding the amount of money there was, right? And they told all their friends, their JP Morgans, their Kuhn and Loeb, all the banker friends that the top was in. This is where these large money makers, or the super rich, the billionaires, made all of their money, right? They pretty much got insider knowledge that it is going to dump, right? And the market dumped into, from 1929 all the way to 1932. And then look where the war started, right? In your 1940s, the war started, right? Let me get a nicer indicator for you guys. So war is very, very profitable, 1942. And you can just see the expansion throughout of the war years, and just a continued uptrend. Like, so war is incredibly good. It's a great stimulant for the market to go up. So this, it's not different at all. This time, it's not different at all. Yeah, Jaggy, what's up? This hex dip is brutal. Yeah, I feel you, dude. It has been quite a ride, hey. Unfortunately, the Wyckoff check, you can see how beautifully the market acted as resistance once, twice. When we finally broke out, we then came back to retest it. So there's incredible support here, and unfortunately that is like at 0.15 cents, right? It does look like that is the area where Hex wants to go to. We can also, if I can just select this, most of the volume that was traded in Hex, you can see this is the red line indicating it here. Now I don't know how valid this is, as this chart is the Uniswap version 2 chart, and we are currently mostly trading on version 3. You can also see most of the volume was traded at this level. Yeah. And if I go on the monthly, you guys like the log chart for some reason. There is a lot of confluence here. That just means lots of opens and closes at this area at 1.7. So it kind of gives you, now this is going to be very, very strong support if we ever get down there. But as you can see, this monthly candle, there's nothing traded. So there's not a lot of support on this candle. The market does not like these massive gaps. It wants to fill like all of the areas. It doesn't want to just go straight up. It will come back down and retest these levels. Now that is the most ugliest drawing I've ever made, but anyway, I hope you get what I'm saying. Like, it wants to fill this gap. Now we've already filled it a little bit, but we want to see some structure in this area at least, and we want a good base to be built here. for the next run. Now this is not all of the history, but yeah. And then at 1.4 cents there's even more support. We can just see all of the candles that closed there. Now I really hope it does not have to go there. Like I would love if it's just reverse here and finish, because we have retested these tops, or this one top of April once already. So at least there's lots of support below us, but at the end of the day, this is still an incredibly healthy chart. You just don't want the lows to be broken, right? These lows down here. That would be very, very negative, but I don't expect that to happen. So this has been, I think, 41 minutes. Like, subscribe, write a comment down below. If there's any other chart you guys want me to quickly take a look at, please drop it in the comments or the live chat right now. And if there's nothing else, I will see you guys tomorrow again. We'll be streaming again then. Do follow me on Twitter. Hans Hex. Check out the links in the description down below. And there we have the spammers now. Let me just remove them. So Girl69. Cheers for now. I'll see you guys in the next one, and bye bye.